Welcome to Beanstalk, M&J's podcast where we are sharing and showcasing our areas of expertise through conversations with practice leaders on their knowledge and experience. Transactions are a natural part of the business lifecycle. Whether you're looking to sell your business or expand through acquisitions, it might feel like uncharted territory. But the truth is, the roadmap has already largely been written. Joining me today to discuss the world of deals and transactions is Micah Stewart, a leader and senior partner in our tax advisory and transaction advisory practices. Hey, Micah.
Hey, thanks.
Micah, thank you so much for joining me on the microphone today to talk about the world of transaction advisory and buying and selling businesses. But before we dive in too much, will you do a favor for our audience and just give some background of your role at Malden & Jenkins and your experience?
Thanks. Yeah, like you said, I'm in our transaction advisory services group and our tax advisory services group. I'm a tax attorney by trade and been with accounting firms and law firms and just been for about 20 years now and helping clients from a tax planning perspective.
And Micah, just when it comes to your background and expertise as not just a tax expert, but also a tax attorney, that brings a tremendous amount of subject matter expertise to this space. So I'm really excited to have you here today to talk to me about this. And to kind of get us rolling, I'm just curious if you'll talk me through a little bit about the transaction landscape. Like as you're out there talking to clients and navigating, the different businesses who are looking to maybe sell or think about acquisitions, just kind of what are you hearing boots on the ground these days?
Well, the market is pretty busy right now across all types of industries. I think with the baby boomers starting to kind of get to that retirement age and looking to either exit or pass the business down to the next generation. You also see a lot of market consolidation from the acquisition side because people see that those owners are looking to exit, and so it makes a good target for them to maybe grow their share of the capital in that given industry.
So that makes sense that kind of generationally, there's just a lot more activity in the market. But as you mentioned, definitely, I think we're seeing that pretty widely across our client base. Just certain industries are experiencing more and more consolidations. Even those of us in professional services right now in accounting firms.
Absolutely.
Yeah, we're navigating that ourselves. And it also seems to me, too, there's just a lot of, kind of what they call dry powder out there right now, too. Kind of money being looked to go to work.
Exactly. There's a lot of cash in the market right now that people are looking to spend, right? And but you're also starting to see a little bit on the private equity side where those investors are starting to look for a return on their investment. So there's also private equity that's trying to unload some of their positions as well.
Because that's something, you have experience. You work with investment banks on the selling side, but also private equity on the buy side and family offices. And can you kind of talk me through that?
Yeah. So generally, you're working with private equity. The intro is like you got a client that's selling into maybe to a private equity, and so you get the relationships through there. But we also represent a lot of private equity groups on the acquisition side and handle all their tax compliance work as well after the acquisition. And then family offices I like to refer to as kind of like mini PEGs, right? Mini private equity groups, and but they're just as active as a lot of the private equity groups, the private equity firms that are out there, maybe even more so. And they are definitely looking for more of that advisory role from that perspective.
And I'm curious, too, from like an industry perspective, the clients we work with, we work with a wide range of industries kind of throughout the corners of the firm, and it seems like there's a lot of activity kind of throughout all those. But are you seeing some particular industry groups that this is kind of especially hot for right now? I know I made a joke that even us in professional services and accounting firms.
Right. Professional services is definitely one. It's really across the board. From construction to real estate, professional, like you say, professional services. There's not an industry where there's really kind of a slowdown. Even in the oil and gas industry or oil field services, it's still very active.
And kind of talking about drivers, we kind of mentioned, we kind of talked through the environment of kind of what's happening and how it's really, cross lots of different segments. But, what's your experience on some of the primary drivers that, are leading owners to make a decision to pursue a transaction, on both the buying and the selling side of things? What are key drivers you're seeing?
Well, again, I think it's on the exit side, it's generally there's nobody in the next generation, especially if it's a closely held business, right? I mean, I think when you start talking about closely held businesses, and you're looking, generally the owners are saying, "Hey, is there a way that I can move this down to the next generation?" But that's not always a possibility. Either that next generation wants to do their own thing, or this is so specialized. Maybe there's that driver. So then you're maybe looking to how do I get this to key employees? Or if that's not a possibility, then now I'm looking for outside investment. It could be through private equity, right? Or it could be through what was once a competitor of yours. Maybe they're looking for consolidation. And so those are the key drivers, I think, on the sell side. And then on the buy side, again, it's I want to increase my market share, right? Or there's just some really good opportunities out there right now too. So it's hard to pass up on a lot of this. And then the hard part there is, okay, now I need to find the capital for this acquisition, and how do I do that? And so even when you're dealing with a buyer, they might also be looking for help on a transaction advisory from a capital injection standpoint, right? Am I going out to traditional financing, or am I looking for maybe bringing in private investors through preferred equity or something like that?
Well, and it's funny. I had a discussion with one of our partners, Wendy, about just when it comes to kind of helping our clients beyond compliance, and some of the discussions we have with them is about seeking out capital to make some sort of strategic maneuver. And oftentimes the first question she'll ask them is, well, why are you seeking capital? Like, what's the purpose here? We're not just trying to shore up like standard operations, right? Like,
we're not looking for cash to make distributions, right? Just to the owners, right? Yeah. Why do you? That's a good point. Is why do you need that capital?
And this is one of the drivers for the capital need. Like you're just saying, is oftentimes to pursue some type of transaction to expand, to grow operations, to find that great opportunity, to join forces with another organization.
Right.
That requires capital.
Right. Exactly. And like you said earlier, there's a lot of dry powder out there, but it's just what is the best way for you to access that dry powder?
And then something I think too is even just expanding geographies.
Right. Oh, 100%. Yeah. But that gets a little, I think, from expanding geographies can be a little scary for those owners who are just now getting into that acquisition phase. I don't know that market. I don't know anybody in that market. And I think that is where we can come in and help, with on the due diligence side, and get them a little bit more comfortable about going into that new market, right?
Exactly. Well, and I guess, talking about that due diligence side of things, that brings me to sort of what's the role of an M&A advisor? Like when does somebody bring you in to some kind of a planning exercise or an ongoing deal? Kind of what role do you, your team, and other relationships that you have in place play into this kind of world of transactions?
Right. I think with either buy side or sell side, it's the earlier the better is always the answer, right? But especially on the sell side, before you're going out and marketing yourself, or going maybe to a broker, or even way before you get into the letter of intent phase, or we say LOI phase, we definitely want to reach out and get somebody in, because from a sell side, it can have a huge impact on your walk-away cash number, right? I mean, I always talk about that is the most important number for a seller. It's not the sales price. It's what is the cash I'm walking away with after taxes, after paying off debt, after other kind of costs, right? And that bottom line number, the top line number could be fantastic, but then you realize, oh, well, now I'm paying a bunch of tax at ordinary rates rather than capital gains rates, and that lowers that bottom line number. And so if we're getting in there early enough, we can make sure that there's no traps for an acquirer. Because an acquirer, when they'll give you a great price on that letter of intent, and then they'll try to find ways to whittle down. And so if we've been in there and helped from a due diligence standpoint, we can help maximize, keep that number at that closer to that what that original offer price was.
So like, I guess there's oftentimes like that valuation side of things, of kind of what is the business worth, and both sides kind of trying to come to some kind of agreement around what the valuation is. But even that valuation, there's a lot more that goes into that, you
right.
know. And I like that you bring you in earlier rather than later. The sooner the better, because they're going to be studying your business.
Oh yes. I mean, through quality of earnings, right? And so every bank that is going to finance an acquisition is going to require a quality of earnings report. And so, and the quality of earnings is like, okay, we're looking at, or what you're reporting as revenue, is that real, right? And then you kind of back out the one-time things, or the maybe, especially when we see clients who are going to acquire really closely held businesses, family-owned businesses, how much of those expenses, those personal expenses that are rolling through that business, right? So we can back that kind of stuff out and say, look, these aren't real expenses that you're going to be incurring, and so maybe those earnings are a little bit better than what we were seeing. That's kind of where that comes in.
Because that's oftentimes the driver of some type of purchase price, is that kind of EBITDA number, right? The earnings before interest, taxes, depreciation, amortization. But the thing is that EBITDA doesn't always tell the full story, because there's more things that need to be adjusted to.
Correct, right? And so, we help from that perspective. Either if you're on the sell side, we know that they're going to be conducting a quality of earnings report. We can come in ahead and look and see what that's going to be. Or if they've already done one, right, the buyer has already brought their people in, we can kind of come behind whoever conducted that quality of earnings study and do that. And then, from an acquisition side too, we can also help on the valuation of that business, right? And so those are two completely different things. I don't think people really kind of understand is the difference between a quality of earnings versus a valuation, right? A valuation is, hey, here's what it looks like it's going to be, and here's the real value of this company, not looking at the underlying earnings of that company, right?
Exactly. And when it comes to underlying earnings, the cash flow it's generating, just the value it's generating for its owner group, like you mentioned before, a lot of times with closely held businesses, they're running certain expenses through it.
Yes.
that under a new ownership structure, a new management team, it's going to look a little bit differently.
Correct. Right. Exactly.
So just trying to envision, okay, the new owner, what are they really inheriting?
Right. And can they look to see that, those earnings are going to maybe increase because we're not backing out all of those personal expenses, right? Or maybe they think, okay, well, they're doing these personal expenses, and this is something that maybe we can account for going forward.
The company vehicle.
Right, exactly.
Something of that nature. Yep. And I like, too, that it's just really harping on the earlier the better, the sooner the better, because we know we're going to have to navigate these diligence processes, this Q of E effort, this really normalizing the EBITDA, really going through this process of studying the business. Let's not wait to study the business when we're trying to finalize the deal. Let's do that earlier, because there might also be opportunities to kind of maximize it. Start to pull a few levers and push a few buttons now to help us down the line.
Right. I mean, if we get in there early, not only are we maybe increasing, you're helping to increase that EBITDA number, because almost all these deals are a multiple of EBITDA. So the more we can drive up that EBITDA number, the better off it is for the seller, right? And then as a buyer, you're also looking to say, okay, you really want to get into those quality of earnings reports. You really want to, and not necessarily you want to, whittle down the purchase price, right? But you still want to make sure that what you're paying for, you're actually getting what you're paying for, right? That's the deal. And so, if on a buy side, from a due diligence standpoint, we could go in there and say, here are some things that some really questionable issues, right? Maybe with financials or just from operations in general, and say, maybe we need to adjust that purchase price down a little bit because of these things. One thing I see a lot of is where you're going to buy a business, and maybe the business is based on contractual relationships, right? And so when you're going to structure that transaction, maybe I can't buy just the assets of the company because those contracts aren't assignable, right? Or maybe even if I buy the interest in the company instead of just the assets, there's some kind of provision that says if there's a change in ownership, then you have to notify the other party to that contract. And those things can drive the purchase price up or down, right? Like if I can't take on these contracts without renegotiating with the other party, and I don't think that other party is going to want to negotiate with me, then maybe that revenue number goes down. So those are the kinds of things that we look at outside of just tax and QOE and valuation. And generally that's where we say, okay, if we're brought in early, that's when we say, okay, now we need to bring in the attorneys to come in and look at these contracts to say, hey, analyze this and make sure that this is something that we can actually take over. And so I think that's why, again, why it's important to bring us in as early as possible so that we can identify those kinds of issues and say, you need to go see, we can't do it as an accounting firm, but we can help you find a good, attorney that can help analyze those contracts.
Yeah, because the balance sheet and P&L don't tell the entire story.
That's exactly right.
Those intangibles, those client lists and contracts
Right,
and all that, they have real implications.
Right, exactly.
And so we just kind of talked through a few different players too as part of like almost a broader deal team. And that's something me as a business owner kind of starting to explore, different types of deals. Just help me get a sense of the overarching environment of the different kind of professionals who I want kind of at the ready for me. I know an overarching M&A expert who just knows the space, has been through this with a lot of the different clients, and then also has the teams for the diligence and QV. But you also reference the needs for M&A attorneys at different states to either kind of just review contracts and then help formalize the deal. And I got wealth managers knocking on my door thinking about, what are you going to do at the outset?
Yeah, that's a big one.
So who are all kind of the players in this space, and how does somebody like you help bring all those together?
So again, I think from a sales side, the players are, and this is kind of what I like this is why I think of us as our transaction advisory group as almost like a one-stop shop, right? Is, when you're selling, it's okay, help me get the best deal I can, right? Do all the due diligence beforehand, and then help me from a tax planning perspective, maximize my return. You want to try to get as much capital gains as I possibly can as compared to ordinary rates. And then now I've got all this cash, right? What am I going to do with it? So we've got a estate planning group here with Malden Jenkins. It's fantastic. And we've got a wealth management group. We can help with all of that So like I said, it's kind of like a one-stop shop. And I think you see other advisors outside, so attorneys, bankers, they notice that kind of thing. And they can say, yep, these people are going to be a real asset to me as well, helping my client. And I'm going to look better for kind of steering them to this group because they can provide all of those services.
And now also, do you find value in just, if a client reaches out to you, they're thinking about maybe selling someday, like introduce them to a bank just to kind of help them walk through the process, not any commitments, or on the other side, just they're thinking about maybe, talking to private equity just to see what would it look like to kind of have PE come into play. Like, do you find value in just introducing them to other
Absolutely,
kind of
right. And even before you go into this process, look, I've had many clients that have started the process, think they're going to pull the trigger, and then back away, and then they're starting again in a couple of years later. The whole going through those kind of introductions and meeting those kinds of people, it helps broaden the base or group of potential acquirers, right? So you're not just looking at one group. If you're talking to maybe some bankers and then a broker or private equity, you're out there and you got everybody looking at you now, not just that banker who can maybe, I can go help you find another one of my clients that might be interested in acquiring.
So talking to somebody like you, it's not just bringing in you, it's also bringing in your team. But it's not just bringing in your team, it's also bringing in your whole network.
Right, exactly. Another one outside of just the the contract issue is, you're buying a big firm or a big business that has a lot of employees. You're going to need somebody to come in from an HR perspective as well. I think we're seeing a lot more of that from an HR consulting side too. So I think, like you said, it's a whole village, right? It's not just there's a lot of help.
When you mention HR, there's also, it seems like, technology considerations. Just
Correct.
As technology is more and more of a headline, how are we going to kind of combine systems and integrate?
Yeah. Absolutely.
So with all that kind of said, I guess, talk me through some of the downfalls and pitfalls of maybe waiting too long. Like, I guess, what's the risk of not trying to be as proactive as we're outlining?
Well, again, I think the risk is if you're the acquirer and you've already entered into some kind of LOI phase, right? So where you've got a clock ticking on that due diligence side, you're kind of limiting yourself, right? That where we could come in and typically we can get those things, we can kind of come in and get that done, but it depends on the size of the business that you're acquiring. And from the sell side, it has a big impact on the purchase price, right? So if we come in after the LOI has already been signed and they're already doing their due diligence and you've already turned over all of your financials, it's kind of late in the game for us to kind of come in and help, So again, I think those are the pitfalls of waiting too long to bring us in.
So regardless of where somebody is in this cycle, at least give you a phone call to give you a snapshot of, okay, where are we? What's been done? What are next steps? How can, from at this point in time, we really maximize the opportunities? There's always opportunities to kind of maximize the outcomes, but even if it's 3 years out, let's still have a conversation.
Oh yeah, 100%, right? I mean, and you revisit it, right? Like I said, I've had clients that have started the process and then put it down for a year or two, and then go back to the well, right? And it does help, and things change over 2 or 3 years, right? And so even if we've helped you out maybe a year ago, and that sale didn't go through, but for different reasons, you could still bring us back in, if you're every 2 or 3 years, right? Just to kind of refresh what we've done before.
And that's something, even if, I'm not thinking about selling until another 3 or so years out, it's just something in the back of my mind. Honestly, I find a little bit of fun to talk about my business
That's exactly right.
with somebody like you. I have my head down in the activities and operations so much to actually take a step back and think about the business as its entity and what are the plans for that,
Right. And then wow, I can walk away with this much cash, right? There's kind of that really does get the wheels kind of turning, right? So.
Yep. And that's something too, because hopefully there will be some kind of significant financial wealth event on the back end of this too. So just to kind of keep those dreams in mind as well.
Right. Exactly.
And Micah, something that kind of comes to my mind too is just there's oftentimes things outside of our control, external factors we need to kind of keep a pulse on. Can you talk me through what some of those look like, what some of those are?
Well, a lot of it, right, is on the legislative changes or regulatory changes. And legislative changes happen all the time. And, a good example is if I think capital gains rates are going to go up in 2028, maybe I'm really looking to structure a sell now and try to make sure that I'm maximizing on these lower capital gains rates. And again, that's something that's hard to plan for. And we see it happen, right, every 4 to 8 years when you have changes in control at the congressional level or at the White House level, and that steers policy, right? And so that's definitely something where you need to be and keep that in mind and are reaching out to us so we can help you, advise you, and say, yeah, this is probably something that's going to happen, or we think this is something we need to keep an eye on, and you might want to speed up your sale. And then from when we're dealing with private equity and hedge funds, there's always the interest at the legislative level on carried interest and taxing in trying to subject that to ordinary income rates, those carries, as well as there's a lot of movement right now by the IRS to subject private equity owners and hedge fund owners to self-employment tax if they're operating through a limited partnership. So those are all the things that we try to keep an eye on from a tax perspective. And that's just the tax world. Outside of that, just recently we've seen legislation regarding home ownership and limiting the number of houses somebody can own. That really affects private equity, especially a lot of the private equity that was involved in or interested in the single family unit rental business. And so now they are going to have to change their strategy, right? Because just this legislation that just came out.
And that's where it feels like there's so many moving targets. And oftentimes it feels difficult when I'm trying to go it alone in terms of, okay, if I try and plan 3-4 years out based on current regulations, are those regulations maybe going to change?
Right, right.
So that's one more thing. Okay, Mike, I just need to give you a call.
Yeah. I mean, we see that all the time. But regulations change on a administration by administration basis. And it's hard to keep up. It's so hard for business owners to keep up with all of these changes and plan accordingly. You just can't plan when you don't know, when there's no long-term policy.
Well, Mike, I'm definitely going to need to bring you back for just a more of a deep dive on planning generally when it comes to tax and other business considerations. But before I let you go on this episode, we just kind of do a favor for our audience and just what are some other thoughts you have in mind or last minute advice or just key takeaways you want to leave our audience with?
If you're looking to acquire or looking to sell, the earlier we can get in, the better off you're going to be from either perspective.
Awesome. Well, Micah, thank you for joining me. I'll definitely be asking you back to the microphone again. And thank you to our audience for listening. If you have any follow-up questions about the business issues we discussed today or any other business challenges you're navigating, please don't hesitate to contact us at www.mjcpa.com.